final week. This is week 14 of your 14-week video coaching series. Congratulations, and thanks for sticking with me through this. This week, we're going to close it out on consolidation patterns, consolidation breakouts. Pretty simple. We're just going to roll right through it. We have bullish consolidation and bearish consolidation breakouts. Bullish consolidation, we're just going to give you a nice little example. We've got a nice uptrend with steady volume going into some sideways price action. So as you can see, it's created a level of support noted as consolidation support and a level of resistance noted as consolidation resistance. This action right here can be called consolidation, sideways trending, or range bound action. Those are the three terms you're going to hear most referenced when referring to this type of price action, the sideways price action. So we're talking about consolidation breakouts here. There's a bullish consolidation breakout, which we're going to cover first, and it's pretty simple. You've got your consolidation resistance, and the price action pops above consolidation resistance on a nice spike in volume. So you've got some uptrending volume on this pop above consolidation resistance. And what you typically see is your retracement back to consolidation resistance turns support. So once you break through this consolidation resistance, it's technically support. Resistance turns support at that point. So you typically see a retracement and then a continuation to the upside. As far as how to measure that move, extremely simple. You take the height of this move, we'll call this A and B. So the AB height is going to result in your C target. So let's, we always use pretty simple math. We'll stick with that. We'll say that the base here is 5 and the resistance is 10. We've got a 5-point AB height, just 5 minus 10, or 10 minus 5, and you just add plus 5 to that 10, so 15, C equals 15. It's really simple. Now, over here with bearish, it's pretty much the same situation. In this case, we have a downtrend prior, and pretty steady volume, and then all of a sudden we start getting this range-bound action. So range-bound action, sideways trending, consolidation, whatever you want to call it. Again, we've got our resistance here along the top and our consolidation support along the bottom. In this case, the reason it's a bearish consolidation breakout is because we've got a break through this consolidation support and the volume picks up a bit on that downside break. And in this case, the support turns to resistance. Over here, resistance acts as support once it's broken. Over here, support acts as resistance once support is broken. So you'll typically get that retracement back to support turned resistance, and then your continuation to the downside. The way to measure the move is exactly the same. You take the height of the consolidation pattern, and in this case, you'd subtract it. So if our resistance was at 15, and here we've got a 10 support, you would simply say, okay, there's an AB height of 5. You want to say minus 5. So your target down here is 5. That's simple. It's very, very simple. Now, one thing to mention here is your price action is not always going to be perfect like this. I mean, this is just a drawn example. If you spot consolidation patterns, sometimes, I've noticed this a lot throughout my years of trading, sometimes you'll get a consolidation pattern where the price action is pretty steady, and then you'll get like some sort of lower, and then you'll get the breakout. So you'll get these higher lows. So you've got your low here where it touched support. You got a higher low and a higher low and a higher low, all leading up into this consolidation resistance breakout. So look for stuff like that, and vice versa in a bearish, lower high, lower high, lower high, then the break of support. I've noticed that a lot. And sometimes you can take advantage, if you see this type of pattern, you can take advantage and enter a little bit before the consolidation resistance break, which is not recommended, in my case, but I've done it before, and I've done it many times successfully when I see this type of series of higher lows going into the consolidation resistance. So a couple key points here. Of course, as we always say, volume is extremely important. You've got to have that increase in volume on the break of support and a bearish consolidation breakout, or on the break of resistance in a bullish consolidation breakout. Confirmation. You want to confirm the breakout, meaning you want to force that this move through the resistance on a bullish breakout and through the support on a bearish breakout. And make sure you play the direction of the breakout. So when it breaks support, you want to short the stock or put a bearish options position, some sort of bearish positioning on that equity or whatever asset it may be. And if it breaks resistance, you want to play the upside direction. So you want to do a bullish position or buy the stock or buy the asset, whatever the asset may be. And lastly, I've showed you examples here where we've got a downtrend going into consolidation pattern. That's not really necessary. This isn't a continuation pattern like we've seen with bull flags and ascending triangles and descending triangles. Those are continuation patterns. This is just simply a consolidation pattern. So it doesn't matter. You can have uptrending action going into this consolidation pattern and then a bearish breakout. So it doesn't really matter what direction the trend is prior to the consolidation formation. Just pay attention to where the breakout took place, whether it's support or resistance, and play the direction of the breakout. That's it. Thanks again for being with the 14-week video coaching series. I appreciate it. I'm Nick Fenton, signing off.